In 2013, a Chinese company signed a deal with Nicaragua to build one of the most ambitious infrastructure projects in recent history. A canal stretching across the country, linking the Atlantic and Pacific Oceans. It was designed to rival the Panama Canal in size and capacity, and at $50 billion, it was projected to cost more than 4 times Nicaragua's entire economy. But it wasn't just the scale that caught global attention, it was who was behind it and where it was happening. It wasn't just a construction project, it was a signal. While the United States has long shaped the political and economic direction of Central America, this canal marked something different. It was China taking the lead, financing, planning, and controlling a route that could reshape maritime trade and challenge the balance of power in a region the US once treated as its own sphere. So what actually happened? Why did China back a project of this scale in a country as small as Nicaragua? And how did the US respond when another superpower stepped into its backyard? Let's find out in this video. For more than a century, the Panama Canal has been one of the most important trade routes on the planet. It connects the Atlantic and Pacific Oceans and saves ships thousands of miles by avoiding the trip around South America. It's also a symbol of power, global commerce, and, for a long time, US influence in the region. But what if there had been another canal, one just a few hundred miles to the north, running straight through Nicaragua? That idea is not new. In fact, long before Panama was chosen, Nicaragua was the favored route for a transoceanic canal. As early as the 1500s, Spanish colonial officials were already considering it. They saw the San Juan River and Lake Nicaragua as a natural route between the Atlantic and Pacific, one that could give Spain faster access to its colonies in the Americas. Centuries later, the United States picked up that same interest. In the 1800s, American entrepreneurs and lawmakers seriously considered Nicaragua as the site for a canal. The geography made sense: a large freshwater lake connected to a river that leads out to the Caribbean. Compared to the dense jungle and mountain terrain of Panama, the Nicaraguan route looked simpler on paper. In fact, by the late 1800s, Congress came close to approving it. The US had already signed the Clayton-Bulwer Treaty with Britain, promising that neither side would build a canal without the other's involvement. Still, pressure was building in Washington to find a route under American control. Then came a turning point. Philippe Bunau-Varilla, a French lobbyist trying to push support for the Panama option, sent every US senator a Nicaraguan postage stamp. It showed a volcano actively smoking in the background. Around the same time, a major eruption of Mount Pelée in Martinique made headlines. That image was enough to raise fears about geological instability. Many lawmakers decided Panama was the safer bet. By 1903, the US had struck a deal with Panama, and work began soon after. When the Panama Canal opened in 1914, it became one of the most valuable trade assets in the world, and Nicaragua's canal dreams were officially put on hold. Still, the idea never really went away. Over the decades, different governments floated proposals to revive it. American companies, international investors, and even foreign governments kept the conversation alive. But none of those efforts ever got beyond the planning stage. Then in 2013, a new version of the canal reappeared. Only this time, it wasn't coming from Washington or a global bank, it was coming from China. And it wasn't just talk. In June 2013, Nicaragua's National Assembly approved a sweeping deal with a Chinese company called HKND Group, short for Hong Kong-Nicaragua Canal Development. The company was led by Wang Jing, a Chinese businessman known mainly for his work in telecoms, not infrastructure. Under the agreement, HKND would receive a 50-year concession to design, build, and operate a canal across Nicaragua, with an option to extend it another 50 years. The scale of the project was hard to ignore. The canal would span 278 kilometers, about 173 miles, more than 3 times the length of the Panama Canal. It would start on the Atlantic side, cut through Lake Nicaragua, and end on the Pacific. Along the way, it would require enormous lock systems, artificial lakes, and a deep trench through farmland and rainforest. HKND also gained control over a wide range of side projects: ports, highways, rail lines, a free trade zone, and even a new airport. In effect, the deal gave the company a long-term lease not just on the canal, but on major parts of the country's infrastructure. Government officials claimed the project would lift hundreds of thousands of people out of poverty. The canal was expected to create jobs, attract investment, and potentially double the size of Nicaragua's economy. Some projections estimated that the country's GDP growth could jump to double digits during construction. But there were immediate concerns. The price tag, around $50 billion was staggering. To put that in perspective, Nicaragua's entire GDP at the time was under $13 billion. HKND said it would raise the money from international investors, but offered no clear explanation of how or from where. There was also confusion about the company's actual experience, given that it had never built anything on this scale. The process moved quickly. In less than a week, lawmakers passed the legislation granting the concession. The deal included no public bidding and little public debate. By the end of 2014, the Nicaraguan government hosted a ceremonial groundbreaking. Officials called it a historic moment. For many, it felt like a turning point, the beginning of a massive engineering project that would finally bring a canal to Nicaragua. But beneath the optimism, the questions were getting louder. Who was really behind this project? Could it actually be built? And why was China suddenly showing interest in digging a canal through Central America? On paper, the Nicaragua Canal looked like a private investment by a Chinese businessman, but the project raised a different kind of question. What role, if any, was the Chinese government playing in the background? Officially, there was no state involvement. The Chinese government maintained that this was a private commercial venture and that Wang Jing was acting independently. But observers were skeptical. A $50 billion project in a region historically dominated by the United States, involving a shipping route that could shift global trade flows. It was hard to believe Beijing wasn't at least watching closely. There are a few reasons why the canal would align with China's broader interests. First, shipping. China is the world's largest trading nation. It imports raw materials from Latin America and exports goods across the globe. A canal capable of handling ships too large for Panama could reduce costs and create a more direct, Chinese-friendly trade route between the Atlantic and Pacific. Second, access. A canal in Nicaragua would cut through a region where China has been expanding its influence for years. Across Latin America, Chinese companies have invested in ports, railways, mining, and energy. These are not isolated deals. They're part of a strategy to build infrastructure that supports trade, secures resources, and strengthens ties with governments across the region. And then there's the timing. In 2013, the same year the canal deal was signed, China launched its Belt and Road Initiative. While Latin America was not officially included at first, the strategy of funding and building global infrastructure clearly overlapped with what HKND was proposing in Nicaragua. Even though Nicaragua was not yet a formal Belt and Road partner, the canal looked like something that belonged on that map, a long-term, high-risk, high-reward investment that could reshape logistics, expand influence, and demonstrate that China could match or exceed what the West had done a century earlier with the Panama Canal. There was also a question of soft power. China could frame itself as a development partner, offering the kind of investment that the United States and international institutions weren't providing. Some analysts took it further. They asked whether a Chinese-backed canal might one day include security infrastructure, ports that could serve naval ships, surveillance capabilities, or military logistics. The idea was not proven, but it wasn't dismissed either, especially given rising tensions between China and the US on other fronts. From China's perspective, the canal might have made sense as a strategic asset. From Washington's perspective, it looked like something else entirely. From the start, the Nicaragua Canal raised alarms in Washington. For over a century, the United States has viewed Central America as part of its strategic backyard. That approach is rooted in the Monroe Doctrine, a 19th century policy that warned foreign powers to stay out of the Western Hemisphere. The original Panama Canal, built and controlled by the US for most of the 20th century, was more than just a trade route. It was a symbol of American dominance in the region. So when a Chinese company signed a deal to build a second canal, one bigger than Panama's and located just a few hundred miles to the north, people in Washington took notice. US officials expressed early concerns about the lack of transparency around the project. The US Embassy in Managua raised questions about environmental reviews, feasibility studies, and whether affected communities had been consulted. But underneath those technical issues was a larger fear. If China, or a company closely aligned with Beijing, gained long-term control of a transoceanic canal in Central America, it could change the balance of power in the region. Even if the canal itself wasn't directly funded by the Chinese state, the strategic implications were hard to ignore. A canal brings with it roads, ports, and security infrastructure, and control of a major trade route, even indirectly, can translate into leverage during a crisis. Around the same time, Chinese firms were investing in deep water ports across the Caribbean and South America. Some of those ports could accommodate military vessels, even if they were officially labeled as commercial. From the Pentagon's perspective, this looked less like a coincidence and more like a long-term strategy. The canal also raised questions about how the U.S. was engaging with its neighbors. Nicaragua had been ruled for years by President Daniel Ortega, whose relationship with Washington had soured over time. For Ortega, the canal was more than an economic project. It was a way to show that Nicaragua didn't need the U.S. to pursue big ambitions. Some in the U.S. argued that Washington was losing influence in Latin America by default, failing to offer investment or partnerships, and then acting surprised when countries turned to China instead. The canal made that argument harder to ignore. It wasn't just about economics or engineering, it was about presence. Who was offering bold ideas? Who was writing checks? And who was being sidelined? The Nicaragua Canal didn't just touch off a development debate. It pushed Central America to the center of a growing rivalry between the world's two largest powers. And while it never reached the construction stage, the project was enough to expose just how tense and competitive that relationship had become. So what really happened? After the official groundbreaking ceremony in late 2014, the Nicaragua Canal quickly slipped from view. On the surface, the reasons seemed simple. The cost was overwhelming, up to $50 billion, more than 4 times Nicaragua's entire economy. The company behind it, HKND, promised to raise money from global investors, but never showed who those investors were. When its chairman, Wang Jing, lost most of his wealth during China's 2015 stock market crash, the financial backbone of the project collapsed. And without direct support from Beijing, there was no state guarantee to keep it alive. At the same time, the timing worked against it. By 2016, Panama had already completed its expansion, giving it the ability to handle much larger ships. That made Nicaragua's canal less urgent in the eyes of shipping companies. Many questioned whether there was even enough traffic for 2 competing canals in such close proximity. Inside Nicaragua, resistance grew. Tens of thousands of people faced the threat of being displaced, and Lake Nicaragua, a vital source of drinking water and livelihoods, was at the heart of the route. Protests spread, and the government's lack of transparency only fueled distrust. But the story doesn't end there. The United States was also watching closely. From the beginning, Washington was uncomfortable with the idea of a Chinese-backed canal just north of Panama. The U.S. had controlled the Panama Canal for most of the 20th century, and even after handing it over in 1999, it still viewed Central America as a critical strategic zone. A second canal, financed and operated by a Chinese company, would have meant China gaining influence in what the U.S. has long considered its sphere. So while the U.S. publicly raised concerns about transparency, environmental risks, and community rights, the deeper motive was to prevent China from gaining a foothold. American diplomats applied pressure behind the scenes, questioning investors, signaling skepticism to the global financial community, and quietly discouraging international support. Potential backers saw the political risks. If Washington opposed the project, it might never gain legitimacy, no matter how much money was poured in. By 2018, HKND had closed its offices, and by 2024, the Nicaraguan government officially canceled the concession. On paper, the reasons were financial and technical. In reality, the project had been squeezed between China's ambition and America's resistance. Nicaragua became the stage for a quiet power struggle, and the canal was the casualty. So what do you think? Was the Nicaragua Canal a real opportunity that could have changed the country's future? Or was it always too ambitious to succeed? And as China continues to fund infrastructure worldwide, will another project like this ever be attempted? Or has the dream of a second canal through Central America already reached its end? Let us know your thoughts in the comments below.